Good morning and happy Friday. Half an hour away from the opening bell here in Hong Kong, in Shanghai and Shenzhen. You're watching the China Show. I'm David Ingles with Annabelle Jewelers.
Our top stories here, and Asian investors digesting blowout earnings from Alphabet and Microsoft. The Bank of Japan decision coming up as well, and potentially complicated by Tokyo inflation falling short of every economist's forecast.
We're talking geopolitics as well. Antony Blinken set to wrap up his trip to China today as Beijing responds to his trade complaints, saying they are playing by international rules.
And we're live at the Beijing Auto Show, speaking exclusively with Pony.ai CEO James Peng for his outlook on EVs and autonomous driving. Quick look at the market action this morning, and we were just discussing then Asian stocks eyeing perhaps their best week for the year so far. It is a bit of an earnings theme that's developing, and we can get more on those after hours movers in just a moment. What else we're tracking as well is just that reaction that's coming through to US economic data, and actually those numbers really surprising to the downside here. Weaker growth figures coming through, higher inflation reviving that talk of stagflation once again. So we saw Treasury yields, for instance, hitting their highest 2024 levels, being reflected so far. What you see for the Aussie bond space, for instance, that 10-year yield rising 13 basis points. That big countdown as well to the BOJ decision, watching JGB yields there as well as the Japanese yen here holding above that 155 mark, and we can get more on that Tokyo inflation number in just a moment as well. Brent crude, of course, one to track. You're very close to that $90 a barrel level at this point in time. Iron ore just a little bit under pressure so far, but let's change on. Big focus after the bell today. We had better numbers coming through for the likes of Alphabet. Microsoft snapped that big surge there. Sales forecast really impressing investors for the current quarter. But certainly, if yesterday the story was about Meta not seeing any sort of ROI from its AI spend, you're really starting to see that playing up, particularly for the likes of Microsoft with its partnership with OpenAI. Intel, you can see they're under pressure here, but it is that concern. Intel, very much the laggard in the chip-making space. How long is that turnaround plan really going to take? Quick check as well, as I mentioned, Tokyo inflation numbers coming out, and this sort of complicates the picture for the BOJ coming into the decision. Tokyo CPI earlier falling short of every single economist estimate. That level of deceleration, it just is that question, Dave, are we starting to see that cycle of inflation and demand-driven inflation really starting to take effect?
Yeah, it's certainly going to feature into the conversation today. You know, we still have a couple of hours of deliberations going on, and also what that press briefing will look like. Will they set the stage? Can they set the stage for further rate increases ahead? Certainly the BOJ, as Mel pointing out. Part of the conversation today. Back here in this part of the world, this part at least, Asia, so we could see, could is the operative word here, the Hang Seng Index end the week higher. That's almost a given. But every single day so far, Monday, Tuesday, Wednesday, Thursday, and Friday. Last time that happened was, I think, back in July of last year. More on the rally in a moment. Antony Blinken, wrapping up his trip to Beijing, is set to meet China's top diplomat, of course, Wang. The question is, will he then move on to meet Wang Yi's boss, of course, Chinese President Xi Jinping? We'll be live at the Beijing Auto Show. Pony.ai joins us in a couple of minutes here. This drop in CNH HIBOR that we went from 6 to 2 yesterday, so about 400 basis point drop on CNH. That's overnight, to be more specific. There are tech stocks in focus, and also within the tech space, earnings in focus. So a very good representation, cross-section of Chinese industry coming out today. So everything from Moutai to airlines to financials like BOCOM and CITIC Securities. And also, interesting enough, a lot of the gold mining stocks, which have benefited from gold prices, are also reporting today. Zhongjing and also Shandong Gold reporting as well. All right, that's the setup for today. Let's get into it.
That's right, yeah. Let's get more on how markets are shaping up. Bring in Bloomberg's MLive strategist, Mary Nicola. And Mary, we were just discussing there the numbers coming out from the likes of Microsoft, Alphabet as well, really impressing investors after hours. Do you think that's going to be enough to offset any concern building around the US economy?
I think this is exactly what the market needs to rally. It's to show that the fundamentals of these companies are still going strong. So you still have a few more coming through. You still have Amazon next week. So there's still a few of the Magnificent Seven coming through in terms of earnings. We haven't heard yet from NVIDIA as well. So that all these earnings and outlooks that show the resilience give markets and traders some relief that there is sustainability and some fundamental support behind this equity rally.
Right. Mary, the other development overnight alongside the earnings story, we had the data, of course, GDP and also PCE, and yields are back to highest of the year. We're now down to one cut priced in from the Fed when you look at swaps. I think that's the question there. Is that actually necessarily a problem?
Yeah. I mean, one of the key things I think we need to look at is the GDP numbers. Yes, the headline was weak, but if you look at the just under the hood, as Bloomberg Economics points out, that if the numbers, when you stripped out some of the volatile components, whether it's inventories or trade, it was actually pretty much a solid number. Yes, slower than Q4, but still pretty solid. And it still tells us that the Fed is going to have to wait, going to have to be patient. And of course, the PCE number adds to it. And then we have PCE tonight that will just solidify that higher for longer mantra. So then the onus goes on the Fed next week, and obviously we don't have any dot plots to really focus on. So it comes down to what Jay Powell says and how he interprets all this data. And especially now for the inflation data, we do have a trend, especially since the first 3 months of the year, we're showing that inflation is still quite sticky.
Yeah, and when you think about inflation and perhaps patience as well, the BOJ, of course, very much a focus today, Mary, with that rate decision coming out. The Tokyo numbers, though, that were due or came out in the last hour or so, concerns that wage price cycle is still lacking vigor. How does the BOJ come up against that when you've got as well a really weak yen that's starting to hurt consumption?
For the Tokyo numbers this time around, I think it's important to add in that there was an effect from the tuition effects that were pulled out. So it might not be that indicative of how, and it could be, and it's very Tokyo specific. So it might not be that indicative of the trend of inflation. But if you look at other factors that for inflation, whether we look at the GDP deflator, whether we look at Tokyo CPI, it still shows that there is inflation, that the BOJ can use inflation as a way to vindicate and say that we're going to hike or do something, especially because of where the yen is. The yen has been trading quite weak, and if they don't do something, come out some kind of hawkish or suggest that they're going to start tightening their balance sheet, we could see another leg higher in dollar yen.
Mary Nicola, thank you. In Singapore, 4 hours, our MLive strategist. Markets in focus here in Hong Kong, especially today, given the rally we've seen. HSI is on track for the best week going back to about December 2022. We'll see if that holds, of course. Asian equities are, in fact, on track because of what's taking place here in Hong Kong, on track for the best week this year. Stanley Chow joins us, our Asia stocks reporter. Hong Kong stocks are hot again. Chinese money's been flowing into Hong Kong. What's going on?
Yeah, this week has been a great week for Hang Seng Index. It's gained more than 6% this week, and it's going towards the best weekly performance since late 2022 when we were hoping for the reopening hopes. So it's been great, and we've seen that in the HKEX, how it's gained 15% this week alone. And we're seeing that some of these Chinese money flooding in to, via the trading links is because they're preparing themselves ahead of the CSRC's pledge to boost liquidity in the Hong Kong market, and also as the depreciation expectations rise for the yuan. This is usually what happens when we see more of that southbound inflows coming in. So these are some of the things that have driven these rally. But of course, the tech stocks have definitely powered the rally in HSI as well.
And where a lot of the money's gone, of course, is into Chinese tech stocks in particular. What's sort of the catalyst for that? And are there any other sectors as well that we could see those funds go into?
That's right. We've seen Meituan, Tencent. These are some of the Chinese tech names that have driven the sector, especially. But what's bewildering is that we don't see an immediate or direct catalyst here. It's more of the traders shying away from the crowded trades. For instance, the Japanese stocks and the Magnificent Seven. The U.S. tech stocks have been a bit underperforming and under pressure in April, especially because of the heightened expectations around the earnings, as well as the waning hopes for the Fed cuts, right? And there's always that theme park analogy, when it's just too crowded and you have to wait for hours for rides. You don't really want to do that. So that's where you are going to somewhere cheaper, and that's where the Chinese stocks comes in. So we've been looking at that. And of course, we're looking ahead for the impacts from Blinken's visit. So some of the places like the solar space and the EVs and batteries, where Treasury Secretary Yellen has also mentioned about the overcapacity issues.
There we go. Sang-Mi Cha, thank you so much. Sang-Mi's last point there, right? Anthony Blinken, we're waiting for progress there. He's in Beijing right now, and we're getting a news line coming through out of Xinhua that they are in fact meeting. The Secretary of State at the U.S. is, in fact, meeting there with the Chinese Foreign Minister Wang. More details than that to follow, of course. Right, just ahead, 20 minutes away, give or take, 19 now. The opening bell, Shanghai, Shenzhen, and here in Hong Kong. That's, of course, a live shot off Beijing. The opening bell, 18 minutes away. You're watching The China Show.
You're watching The China Show, and U.S. Secretary of State Antony Blinken in China this week for some pretty difficult and thorny discussions. But one of those just taking place. We're hearing from local media that he has started talks with the Chinese Foreign Minister Wang this morning. Lots of different items on the agenda, perhaps China's support for Russia's war machine, industrial overcapacity really front and centre, but also balancing those against some other needs or requests that Beijing, for instance, help curb North Korea's nuclear program and do more as well to help ease tensions in the Middle East. So let's get more on that now. Bring in Digby Ren. He's geopolitical risk analyst and policy advisor at Belt and Road Capital Partners. And Digby, there are so many different items on the agenda here, but given we've seen that increasing hawkishness really from both sides, what would you constitute as a success from these discussions?
Oh, look, any consensus agreement that can be arrived at is going to be a success. But of course, I think within the context that we have now, especially with all of the statements and the brouhaha that just happened in the week before Blinken leaving for Beijing, so spies, genocide, overcapacity, all that sort of thing, it doesn't put a nice smooth ground for the beginning. So it's a case of a big media narrative splash, but when it comes down to it in Beijing today, I think it's going to be very small ripples.
Sometimes small helps, though. Digby, I'm wondering, for both sides, to follow up on Annabelle's question there, what specific concessions do you think the Americans will be able to take back home? And also, what would constitute a win for Beijing? What do you think they'll get out of the U.S.?
Well, I'd rephrase your question just slightly and say, what is the U.S. going to get out of this? And the answer is what the U.S. is going to get out of this is really nothing. Then I don't see any possibility for Blinken to come home with a package that's going to make the election in November look better, that's going to make the Americans look better in any way. One has to remember that the narrative push that the Americans have released in the run-up to Blinken's visit to Beijing is really just a noise at this point in time. And so in that meeting room right now, it's going to be a very different story. And I think the 5 points that China brought up, and the first one, the very, very first one is, can this be done with mutual respect? And I think that, there's no reservoir in Beijing anymore for the actions of the US, which is always punch first and then try to be nice later. This is not going to work. It's the same old playbook. And I think Blinken's and Biden have put themselves in a very strange situation vis-a-vis China. And I can't see a lot coming out of this. I don't think there's going to be any takeaways for the US out of this at all.
Just as we're speaking, Digby, we're getting a line actually coming out from Wang saying that ties have stabilised between China and the US, and there is, I guess, an argument that talking is at least a positive. Being in negotiations or discussions with each other on a semi-regular basis is better than nothing, but still the negative factors are building. How do you think China's weakened economic position sets it up going into these discussions?
Well, I think I just saw some figures. The very first thing this morning was 1.6% GDP growth for the US, 5.3 for China, and going forward, I think China is set for. It's probably going to stay hovering around 5% for at least the next few years, unless something really big happens. But look, in the lead up to the November election, I think the US has got to maintain this idea that it's got great economic growth and that China doesn't. That China's weakening. But look, 5.3% growth, sure, it's slower growth, but you can hardly say that the economy was weak. So look, this doesn't bode well for the US actually. With the, look, overcapacity is going to be a big thing about exports and everything else, but you can see that the Europeans are slyly, and Macron's recent statement, the Europeans are kind of trying to now balance with Asia to offset their problems with Russia and so forth. Macron saying, well, hang on, maybe a little bit of distance with what the US policy really is. So look, speaking to each other is always good, but I have to say that really in this way it's very pragmatic, and I honestly can't see that that any real positive outcomes are going to come from this, other than that there's still diplomatic contact. But Blinken's record in diplomacy and amongst diplomats is not good.
Okay, well, Digby, just hold that thought there, because we are getting, speaking of Antony Blinken, we're just getting more lines coming through from this meeting that is in fact taking place as we speak here. Yep. He's told his counterpart that, well, the need to avoid miscalculations, and my brain, Digby, immediately goes to the South China Sea in terms of just miscalculations here. Among the many things that they need to sort of sort out and keep within the rails, what do you think happens with the South China Sea?
Oh, well, South China Sea is going to just keep going. The essential problem in the South China Sea is not so much militarization. The real problem in the South China Sea is that that's where all the trade goes through. And most of that trade is Chinese-based trade, and China trade with its neighbors. And China's problem is always it wants to guarantee its own security for its own trade, its own periphery. And, of course, as long as America is active far from its frontiers and on the periphery of China, I think China has no choice. It's always going to have to say that, look, our security in our periphery is more important. And this means that the long-term meeting point for activity in the South China Sea is actually related to something else. It's not really related to the South China Sea. And you can see that there's only one very small problem that's been, going on for the last 6 months, which is, with the Philippines. So, look, I think that the code of conduct is Indonesia tried to push it through the ASEAN this year. Will Laos try to keep doing that? Let's hope so. But, look, I don't think the South China Sea is the biggest problem.
A final question for you. We still don't know whether or not Antony Blinken then gets an audience with the Chinese president before he flies back. Stick your neck out. Do you think they'll meet? And what would that mean in case, of course, he does meet with the Chinese president?
Well, that would mean that some consensus, some positive step has come out of the 3-day trip, and that a meeting with Xi Jinping will kind of seal that there is some kind of consensus going on. Whether that's going to actually happen right now, I think depends on what happens today. If it rolls out today that there is a breakthrough, where can they get a breakthrough? Something on trade, that's going to be very difficult, with more sanctions on chips. Look, and the possibility of SWIFT banking system, that's a very dangerous maneuver. Look, I think Xi Jinping might very well meet Blinken, but it's got to be based on the sense that something comes out of these talks. And Blinken wants that, I think. He definitely wants the opportunity. So he's got to find one thing. And look, that possibly, what can that be? Multilateral cooperation is the obvious one, but all the other ones, military, security, human rights, the trade, I think these are all going to be very, very complex. And really the one that you're going to get is diplomatic engagement. Yes, keep going forward, keep having discussions, and multilateral cooperation. But I think that's still all of that is still very, very complex and going to provide us with a lot of media attention until the November elections in the US.
All right, Digby, thanks very much for your time. That was Digby Wren there, geopolitical risk analyst and policy advisor at Belt and Road Capital Partners. And as we said, US Secretary of State Antony Blinken meeting with China's Foreign Minister Wang Yi, talks just opening in Beijing. But let's get a look at some of the other top geopolitical stories that we're tracking this morning, because Saudi Arabia plans to host a meeting on Monday to discuss Gaza's future with foreign officials, including US Secretary of State Antony Blinken. Sources say the talks in Riyadh may also include the EU, the UK, Jordan, Egypt and Qatar, as well as the Palestinian Authority. We're told it's designed more for initial contact between the parties than anything likely to achieve concrete outcomes. The US has decided that Australia and the UK do not yet meet the arms export standards required for the three-way military alliance known as AUKUS. It's a sign the security agreement announced 2 years ago may be in for delays. The US was required to formally certify the standards by April 20, and Australia and the UK now have 120 days before their next assessment.
Right, it's 9 a.m., 9:20 in the morning here in Hong Kong. When you look outside the window, though, it seems as if it's 9:30 in the evening. It's dark, the clouds are upon us, and it looks like the heavens are about to open up. So hope you're wearing your cheap shoes today. Hong Kong stocks set to open higher, though, this Friday. 6 minutes away, the opening bell. This is Bloomberg.
Just about 5 minutes away from the open in mainland China and Hong Kong, but some of the stocks that are moving here in pre-market trade, one of those, well, JD Logistics actually unchanged right now, but it has been reinstated to a buy at Goldman. BYD, of course, tracking here, doing a share buyback of nearly 1 million A shares. CNOOC, we had its earnings out, record profit output expanding to an all-time high, and then as well watching Jiangxi Copper here, because copper, as you were saying, Dave, reaching its highest level, the Dalian contract, since 2006.
Yep, 80,000 there for the first time. RMB for the first time since that time. There we go. If Paris Hilton was commenting on these markets, she'd say one thing: that's hot. This is Bloomberg.
Welcome back. You're watching the China Show. We're counting down to the market open, but also underway this morning is Secretary of State Antony Blinken meeting China's top diplomat Wang Yi. And so far, some of the headlines crossing from that is that Blinken is saying they can't avoid any sort of miscalculation. And Wang Yi as well saying that ties have stabilized, although negative factors, David, they're also said to be building here.
Yeah, there we go. More lines coming through, which we'll get to you once they do cross, of course, the Bloomberg terminal. Welcome to the show, and happy Friday. 10 seconds to the opening bell. And the question really on Antony Blinken is, after this, does he then move on to board the plane, or does he just meet with the Chinese president, Xi Jinping, ahead of that trip back home? The open and market-wise, though, it's been very good. It's been very hot. Weather-wise and in the markets. A Hang Seng Index 17.4 right now, 0.3%. Every single day this week, 5 straight days, give or take. Last time, actually, we had gain Monday to Friday was back in July of last year. So effectively, we're looking at just about, depending on the index you're looking at, of course, the best week for equities here in Hong Kong in particular, going back to late 2022. What happened then? China was coming out of COVID zero. Weakness across the currency markets, a quick glance at commodities. Since we're wrapping up the week, right, a glance up the four best performing stocks effectively here in Hong Kong. Is there any temptation to take money off the table given the move up in price we've seen? And we were having this conversation earlier with our Asia Stocks reporter, Sang-Mi Cha. And really a symptom, perhaps, of this rally taking place are the gains we're seeing in shares of HKX this week. In fact, we're going to show you that once we turn the page here. A couple of stocks leaning, Sino Biopharma. HKX is still up. Meituan, 0.3%, as you can see on your screens. We talked about earnings. I'll do this very, very briefly. Page 1, of course, of the big earnings coming through. So you have the big consumer staples names, liquor makers, Kweichow Moutai, and of course one of its rivals, Luzhou Laojiao. A lot of the big industrials are coming out, so Baoshan Steel, Jiangxi Copper, financials like China Life, Bank of Bocom is also coming out with results today. And there we go, Citisec, a lot of the gold mining stocks, of course. And speaking of, and given the theme we're tracking as well this week, Guangzhou Auto is coming out with earnings. Some data, initial estimates on data for April coming through. A decline, I believe, out of the PCA. They're doing estimates going into these last few days of April. Bottom of your screen's down 1.5% year on year. So, yep, Bell, there's a big auto theme, of course, coming through across these markets this week.
Very big auto theme, really a big focus, of course. And I was just thinking, if you're not glued to the headlines coming out from Secretary of State Antony Blinken, Wang Yi, then you're probably also just focusing on what's happening in the Beijing Auto Show. And let's get back to our correspondent, Stephen Engle, who's there with our next guest.
Yes, that's right. I mean, technology is the theme here. Obviously, EVs are in high display across the spectrum of different kinds of cars. Obviously, and the Chinese players are major players here, of course, in the EV space and high-tech, smart EVs. But, you know, it's not just gadgets, obviously, in technology. Fully autonomous cars, they are a reality, and they are likely the future. And I have with me the founder and CEO of Pony.ai, James Peng, who is pioneering a lot of this technology for autonomous driving, including the one behind you, which is the partnership with Toyota and also Guangzhou Auto. That joint venture essentially has this fleet of robotaxis. You are already rolling these out on the streets of China. How much of a good test ground is China become for this kind of technology?
Yes, great. It's great to see you, Steve, in the Beijing Auto Show. In fact, we have already testing the driverless vehicles on the open road in China for the last 6 years. Starting from a year and a half ago, we're running fully driverless in both Beijing and Guangzhou to the public.
To the public, so actually paying passengers are getting in these and using them as a robotaxi?
Absolutely.
In select areas, though?
In the whole region. So in the whole district, it's not like a small part of the road. For example, in Beijing, it's 60 square kilometers of Yizhuang district. And in Guangzhou, it's 800 square kilometers of the Nansha district. So it's the regular users using these vehicles as a taxi service for their daily usage.
So what's the next step? I heard there was an announcement yesterday, along with Toyota, your main partner, that there will be a fleet of these robotaxis across China. Can you give me what you plan over the next, say, 5 years?
Absolutely. So the first and foremost, Toyota is a strategic partner and an important collaborator for Pony.ai. And the joint venture we formed lately is for the mass production of the vehicles that we have seen over here. And this will be thousands of vehicles that will be off the assembly line of the GAC factory, and they will be deployed into the cities for the regular users and passengers to enjoy.
Tell me a little bit about the technology. We're going to talk about the IPO coming as well and some of the other finances. But as far as the technology here, of course, there's some debate about the right technology going forward. We know that Elon Musk is talking about robotaxis as well. He's kind of looking, though, for pure vision technology, using cameras, less on maps, and LiDAR. What kind of technology do you have built in here in the front of the car as well as on the top?
Yeah, of course. I think these vehicles, compared with our previous ones, at least on the outlook, you have two important improvements. One is it's much more integrated. If you take just a glance of it, you can hardly tell this is a robotaxi, right? It's like all the sensors are fully integrated with the vehicle. Another feature is we have greatly enhanced the user interaction features. For example, the interface inside the front panel even has the welcome lights on top. In terms of technology, we use sensor fusion with LiDAR, with camera, The main reason is we think technology is the means to the end, which the end is for safety, for comfortness. And we use the good technology to ensure the passengers are safe, they're going to enjoy the ride. And as the technology progresses, of course, we'll probably use cheaper sensors. And the LiDAR pricing is going down to the hundreds of dollars, even cheaper.
Right. So what obviously you've applied for an IPO potentially in the United States, either NYSE or the NASDAQ. We got that announcement this week from Chinese regulators. They've essentially approved. That is correct, right? The Chinese regulators have approved for you to go list in the United States, which is a big move as well, because there's been a bit of a chill, obviously, for Chinese listings in the United States. First of all, how significant is that to list in the United States, to tap those institutional investors, and how much do you really need to raise to essentially propel this?
Currently is a CSRC approval, so that means we are, from the Chinese regulatory point of view, we are eligible to be listed. But then, of course, it's just the beginning step of the IPO journey. And along the way, we'll talk to the investors. We'll see what's the market condition is. And then based on that, we'll form our financing strategy.
Do you need to be profitable before you list? Are you profitable, or when will you be profitable? This is the better question.
No, I think for us, compare with several years ago, the good news is we are actually formed a solid business plan. Right now, we have actually solid revenue coming in. We have great partners like Toyota. And we have actually formed into trucking business, into the mass production ADAS business. So our business lines is diversified, and I think we are in a good, solid condition to be IPO eligible. Of course, in terms of the profitable, I think it's along the way. Part of the joint venture and mass production of the autonomous driving vehicles is a solid step towards the path to profitability.
How, though, if you do list in the United States, obviously you have some global ambitions, how do you address the data security concerns that have risen? I mean, you have to navigate geopolitics and data security. You don't want to become the next one in the crosshairs like TikTok, right? So how do you address these issues?
Yeah, absolutely. That's actually in the front and the center of our strategy going international. Actually, currently, we already have plans to work in the Korea market, in the Middle East, and we actually have a small effort in the Luxembourg as well. In each of those efforts, the local regulation has always been the number one in our mind, and will follow all the regulatory requirements. In terms of data security, we have a strict policy. All the local data stays local. And of course, all the other, in terms of just the other mapping issue, everything else, we are definitely conforming to the regulation.
Are you finding, you talked about those international ambitions in South Africa, in Luxembourg, in Saudi Arabia, obviously potentially listing in the United States. Are you finding that the Chinese offerings, including what you're offering, is being well received? Because the U.S. has its own offerings as well, like Waymo and Cruise. What kind of reception are you getting?
Yeah, I think the reason we'll go international is, first, it's our vision, it's our mission, where our company model is autonomous mobility everywhere. So very start from the day one, we have the global ambition to offer autonomous driving service to the users globally. We have good partners in those local markets, and they value and cherish our technology, our product. So it's their help, it's their local government's help that empowered us to go to those markets.
Very quick, we have to go, but IPO within 5 years? Within 2 years?
Hopefully so not, but we'll see.
Within 2 years?
Hopefully.
Hopefully. I knew he wasn't going to nail that down for me. We'll see. We're going to go down and test out their autonomous driving vehicles as well, potentially as early as this weekend.
Yeah.
We're going to see for sure if this works as claimed. Back to you guys.
Well, Steve, really looking forward to hearing how that goes. There's so much expectation around these autonomous cars. That was Steve Engle there speaking with James Peng. He's the co-founder and CEO of Pony.ai. Of course, as we said, looking ahead perhaps to a listing in the US. But let's take a look at some of the other stories that we're tracking in China on the policy front. A state council report says authorities will strengthen their informal guidance among state-owned banks. It's a bid to stabilise credit growth and boost economic development. The report also says China will support state-owned banks in selling total loss-absorbing bonds. A commentary by the PBOC in the People's Daily says it will promote legislation in key and emerging areas of the financial industry. The report says the central bank will bring all financial activities under supervision and promote risk prevention in key areas. It also threatens lifetime business bans for people who are, quote, seriously dishonest. Bloomberg has learned that China has taken another step to limit domestic investors' exposure to offshore debt issued by LGFVs. Sources say the country's interbank market watchdog has halted registration of new credit-linked notes, that's a derivatives product, that uses offshore LGFV debt as underlying assets. It's indicated the suspension is temporary, but not when it may be lifted, Dave.
Okay, brief check of markets, 12 minutes into the session, and we are looking and getting a day 5, and altogether now currently on track for the best week for Hong Kong equity markets, going back to the actual start of that reopening rally in early November of 2022. Does it hold? Question mark. Plenty more ahead. This is Bloomberg.
All right, good news on the earnings front. Big tech coming out. Numbers in focus after the bell. Microsoft, Alphabet. You can see that surge coming through. Snap, another big gainer. Intel, of course, disappointing investors, but we can get more on those earnings. Bloomberg's John Hyland is breaking down the numbers for us.
Alphabet, Microsoft, and Intel are all out with earnings results after the closing bell here in the U.S. The Google parent Alphabet posting strong first quarter results and announcing it would pay a dividend of 20 cents a share and repurchase an additional $70 billion in stock. Shares are jumping in post-market trading on those results, which saw first quarter revenue come in above estimates at $67 billion, excluding partner payouts. And when it comes to artificial intelligence, the company's president, CFO, and CIO, Ruth Porat, said they're excited about what AI can add to the user experience within the search business. Meanwhile, Microsoft also out with revenue numbers for the quarter that topped analyst estimates, coming in overall at $62 billion for its third quarter. The company's cloud division, Azure, saw revenue come in better than expected as corporate demand for artificial intelligence was a driver of strength. On the earnings call, the CFO said that Azure sales beat was fueled by AI and non-AI tasks. And finally, chipmaker Intel trading lower after offering a lackluster forecast for the current quarter. Intel, which is the biggest maker of personal computer processors, said that sales will range somewhere between $12.5 to $13.5 billion, which is just below the average analyst estimate. The company's CFO said the forecast was hurt by a packaging capacity shortage. He also added that the first half of the year has been softer than expected, but they do expect stronger results in the second half. From New York, I'm John Hyland. This is Bloomberg.
Right, more on these earnings coming through this week. Robert Lee with us here on set, Bloomberg Intelligence senior analyst, for a deep dive into what we've heard and what we've seen so far, and what stood out to you the most.
Okay, I think it has to be Google. So we saw 3 main companies report last night, being Alphabet or Google, which was really good. Then Microsoft, which was pretty good, and then Intel, a continuation of the company-specific issues that it's suffering at the moment. So just looking at Google, we saw the dividend, which was a bit speculated in the market beforehand. So again, enhanced shareholder returns, that has to be a good thing. Their ads business is holding up really well, given the strength of the US economy. Numbers came in ahead on that front. YouTube-related ads are very strong. Margins came in substantially ahead of expectations. What's not to like? So I think, the Google numbers or Alphabet numbers, sorry, I'm a bit old school there, I keep referring it to Google, it's Alphabet these days. But, I think it looks pretty strong. Having said that, just to take a brief step back, Their capex is ramping up significantly, as we saw with Meta a couple of days ago. They're looking to put heavy investment on the AI side going forward. And I think there still is that question for investors. While things are definitely moving in the right direction, are they going to fully monetize that in the long run? And are they going to fully, recoup their investment? So I think there is a residual question there. And also one last thing, just on Alphabet, their free cash flow numbers for the quarter actually came below expectations. Market doesn't seem to care about that at the moment. But again, it's the very heavy capex burden which is impacting free cash flow generation. And I think that's a trend we're going to see in the coming quarters.
Do you think Microsoft is doing a better job at monetizing on the AI front? Because a lot of investors that we speak to are saying that this is now becoming a key stock driver, and we are actually seeing revenue being generated. But if the outlay is a lot higher than that, why do you think that investors are more optimistic when yesterday they really slammed Meta for increasing its capex but not seeing so much ROI on AI spend? Yeah,
the beauty of Microsoft is it's a very broadly spread business. Having said that, it still has a main exposure to the PC industry. So what we saw there is their cash cow business on PCs. While it may not be the highest growth, it's doing very well and very steady. We had the impact of the Activision game side. Their mainstream games on Xbox is doing well. It's very diversified, broadly spread. And don't forget as well, they own Azure, which is the #2 ranked cloud business in the States. So that is both generating from decent demand still on the corporate side, plus the incremental AI side. So I think, and don't forget as well, Microsoft has this major stake in OpenAI. So I think it's a much more diversified business with key inherent strengths and market leaderships in most of its business, plus with a much stronger position in AI overall. So I think on fundamentals, I think Microsoft, while it may be a slightly slower burner versus the others, it's a lower risk play on AI. So yes, I agree that I think they're very well placed in the long run.
Yeah, and speaking of fundamentals, I mean, Intel fundamentally is a very different story. It's really very weak in the AI chip race, and the company is sort of asking investors to be more patient with its turnaround plan. Do you think that we're going to actually see the light at the end of the tunnel? And what are you expecting as well for its new Gaudi chip as well?
Yes, Intel has had challenges for a good number of years, right, going back to the beginning of my career. I mean, they're a PC-centric business with a very, they're #1 ranked in PC processors and also server processors. As that market has slowed over the years, they've looked to diversify into other markets. Going back, more than a decade, they were looking to diversify into mobile. That really didn't come off for them. These days, the focus is more on foundry. And again, given the technology and market leadership of TSMC, it's really, really hard for them to break into that. So what we saw last night is, foundry isn't really coming through for them, and that's been the case. Gaudi, it may or may not benefit them, but we'll have to wait to the end of the year to see that. It's very early days, and winner takes all because NVIDIA, has got a commanding lead at the moment.
Yeah, still around 90% of market share, right?
It is. Substantial market share.
Yeah, all right. Robert Lee, thanks so much for your time. That was Robert Lee there from Bloomberg Intelligence. And speaking of AI, of course, the Information is reporting that Elon Musk's AI startup, XAI, is close to raising $6 billion from investors as the company looks to compete with OpenAI. Their sources say the funds would value the company at $18 billion, excluding the investment. Sequoia Capital is said to be one of the investors participating in the funding round. We'll have plenty more ahead. This is Bloomberg.
Right, as it's Friday, it's certainly good to wrap up. One of the key themes that's emerged this week was really the revival of the deals market here in Hong Kong. So a lot of IPOs, a lot of trading debuts, but not to mention, of course, how the trading debuts sort of fared.
Yeah, well, a lot of disappointment maybe as well. That was.
Yeah, I was trying to avoid it, but yeah, okay, since you're going there.
Yeah, three big ones in focus there, but the main one is Chabado, which is a tea maker or a tea company that listed in Hong Kong. That's debuted or raised more than $300 million, which is sort of a threshold that we look at for something that's more significant value. But big underperformance, and you saw other smaller deals there. The engineering services firm, that's the second one on the list, and a Google-backed AI company, that's Mobvoi as well. Not great results really coming through for those.
in fact, on Bell's point, right? So the bubble tea makers trading at 11, the IPO price was, what, 17.5. So it's still
and what was,
below water.
What was really interesting as well is that they had a fixed price for that. They didn't do a marketed range. They sold shares at $17.50 a piece. And so what we also heard from sources that a lot of people that subscribed to the share sale were family or friends as well. So it didn't even really perhaps get more of an institutional following.
Cornerstone investors.
Exactly, yeah. So as you can see, that really big slide, it doesn't bode very well. Of course, Hong Kong is trying to attract more listings. The IPO pipeline is very weak. But I also find it really interesting against the backdrop of the performance that we've seen for Hong Kong stocks as well.
Well, Hong Kong stocks and Hong Kong Stock Exchange, right, which has done very, very well this week amidst the flops we're seeing in the IPO market. And just the juxtaposition, it's night and day, right? We've done very, very well on a benchmark basis here in Hong Kong. GMM is looking like this, reports for the best week so far of the year. Oh, and we almost forgot, it's BOJ Day. I guess we have another hour to discuss that. More on that and others in a moment. This is Bloomberg. Happy Friday.
Welcome back to the China Show. Seeing gains for mainland equities, but our focus very much shifting to Japan this morning as we await the BOJ decision. No changes expected, but if history is any sort of guide, we could be waiting a little bit longer for the decision, because since the waiter took the helm, the BOJ has released its policy decision at an average of 12:31 p.m. local time, David.
Yeah, so I guess we're taking bets. We are, in fact, taking friendly bets here in the newsroom what time that decision comes out. I think I'd take it if they come out this hour or so. So fingers crossed for that. No incentives particularly. Markets-wise, Hang Seng Index, 30 minutes into the session, 1.4%, 17.5 right now. 5 straight days of gains, on track for the best week here. Going back to November 2022, that's doing what you're reading at bottom of your screens right now. Asia-Pacific lifted by what's taking place here. A glance under the hood, the 4 best-performing sectors so far. So you have developers at the very top. Last we checked, at least commercial services, consumer discretionary, and also you're getting a lot of the big tech names as well playing out. In fact, number 4, in fact, as we speak right now, we are pushing session highs on that specific benchmark. Can we look at the 4, please, if we can as well? Now, all that being said, so when you look underneath the hood, for example, big tech's been doing very, very well. Consumer names, leaning, Sino Biopharm, Meituan has done very well. HKX, which is the operator, exchange operator here, is number 4 in the Hang Seng Index. Very good gain so far today. Japan, as we were pointing out, and Bell just outlined, of course, what this hour and the next hour. In fact, let's include the press briefing taking place in about 5 hours or so into the conversation. 2-year yields are back to the high since 2015. The 10-year yield earlier on was actually back, I believe, to the high since November, if I'm not mistaken. I could be mistaken there. But that being said, we're fairly at extreme levels. Topics Banks Index, which typically is a proxy trade if you go long that long, change on the BOJ. Nikkei 2254 tends at 1%. 30 minutes at a lunch break right now. Very briefly, all things put together, the benchmark is up. We'll see the top of your screens. It's been a very big week for earnings in the U.S. Of course, U.S. futures are coming up as well. 2- and 10-year yield slightly lower right now, so we're back below the 5% handle on the 2-year yield. Effectively, though, nominal yields are back to the highest level since for the start of the year. Since the start of the year, 1.8% on the TAIEX index. Yep, we can be here forever, Bill, but I guess we can talk more about Japan right now.
Yeah, that's right. And the Tokyo inflation, of course, something really essential data point ahead of the release early this morning and really undershooting what economists had been expecting. But let's get the view or the reaction to that from our Bloomberg Economics Japan economist, Taro Okamura, joining us some more. And Taro, a lot of this is sort of being attributed to Tokyo's government waiving high school fees. But do you think that's the whole story here, or is there something more that we haven't been really focusing on enough?
Hi, thanks. Actually, even stripping out the effects from the waiver of Tokyo's high school fees, I see the gauge surprisingly weak. For example, the food items and also household durables slowed its price gain. That speaks to me that, given so far we had high inflation and there's a cost of living crunch for consumers. So now the retailers are kind of still hesitant to raise its prices, although their cost push pressure pressure is still imminent. So that was a bit of a bad sign for the Bank of Japan. But looking ahead, we can expect a very strong wage growth from this new fiscal year or business year starting this month. So I think the BOJ can send some hawkish signal at today's meeting.
Right. And Tara, on that note, you think they set the stage for rate hikes. What specific meetings are we talking about? Where do you expect those incremental hikes to come? When, this year? Because we have a couple of more meetings coming up, of course.
Right. I'm expecting 2 hikes this year in July and October, where the BOJ updated its outlook. So the thing is that, in the longer run, it's really hard for Japan's economy to keep a stable 2% inflation. But at least during this year, we are going to see a solid core CPI inflation comfortably above 2%, even though today's Tokyo CPI undershoot, but it won't matter still. So that's why the last thing the Bank of Japan wants is if something happens, for example, the U.S. unexpectedly stall or China gets into a worse situation, this inflationary pressure kicks in again, the last thing it wants is coming up with another unconventional monetary policy. So I think they want to have some policy buffer when the CPI is comfortably above its 2% inflation.
Do you think then that the BOJ perhaps might signal something around QT instead?
Right. I think it's easier for the Bank of Japan to announce QT. And I actually voted the Bank of Japan will announce to start QT in this meeting. And it's actually reported by Gigi. And because, the Ueda is signaling many times about, he's thinking about reducing JGB purchases, and it's not going to be that much a surprise for the market. So that's going to be a convenient tool for the BOJ to show its kind of hawkish stance to the market.
Taro Kimura, our senior Japan economist in Tokyo, for us on the economics of things. Let's talk about the currencies of things here. Our Asia FX and rate strategist, Stephen Chu, is joining us right now to talk us through this specific angle. Dollar-yen, intervention, no intervention, what? Or is this... As we proceed.
Dollar-yen, same drivers over 2 years. I've spoken over 10 times. I'm sure you differential.
Okay, Stephen, you there. So I'm
thank
kidding.
you for having me.
Go ahead. Yeah.
So again, the question is firstly, of course, how fast or when the Fed is going to cut. Obviously, that's more important than when the BOJ is going to hike again. Just because when we talk about hikes, I've read Taro's research. He was expecting 40 bips of BOJ hike in the second half of the year. The thing is, if the Fed has to cut, they will cut more than that for sure. But if they don't, then even though with the 40 bips BOJ hike, it's not going to help the rate differential. Now, we saw 2-year gap, 10-year gap, US Japan gap. It's still widening. So that's why dollar-yen just keep pushing higher and higher. 150 over the last 2 years, now 155. It's not going to end, it's not going to stop, because it's all about carry. You can't just short the dollar-yen and wait for the BOJ to do something, and wait for the Fed to do something, because the cost of carry is so expensive. So that's why, yes, market will keep pushing higher, and the BOJ will be around and wait for intervention.
But as Tara was also just saying there, he's expecting the BOJ to announce the start of QT today. Even if they don't do that, perhaps they just signal the intent to do so. Is that something that's going to be a way to put a floor underneath the Japanese currency?
Not necessarily, but I think, yes, they will announce something. If they don't, they will probably do something that's called stealth tapering. So they would not say, but they will start buying less and less JGB. The reason being that we've also alluded to that over and over is because BOJ is owning over half of the JGB market. And that's not healthy at all. And they want to quit. And now is the perfect juncture, especially in the first half. If they don't hike rates until the second half, what they can do to convey a hawkish signal is actually signal tapering, or QT, as Tara has alluded to. So that's why they're going to do that. But whether that's going to help yield, whether that's going to help dollar-yen, is another story. So now you see the 10-year JGB actually creeping higher towards 1%. But how fast it will break beyond 1% is another question. I'm sure BOJ, if they're seeing 10-year yield rising too fast, they're going to have to speed up buying again. So that's why for dollar-yen, I don't think that's going to matter for now.
Right, and speaking of the carry, it's safe to assume the yen remains one of the most preferred, if not the most preferred funding currency. That's one part of the question. And where do you think where do people then take that money? Mexican peso has done very well. US dollar, we were talking dollar yen, for example. How are you looking at the carry right now?
I mean, like, obviously this year, apart from the yen, the CNY is also a very favorite funding currency. So yeah, it's going to stay that way until the rate gap like narrow materially. What are they going to buy? I mean, dollar, obviously, from a yield perspective, it's not the highest if you compare to EM, but then from a risk-adjusted perspective, it's also a safe haven. So I wouldn't actually go anywhere apart from the dollar. Now, we're talking about U.S. election, we're talking about a lot of geopolitics, Iran, Israel. A lot of uncertainties and volatilities this year. So of course, EM can give you higher carry, but then like if you want to prevent the risk of selling anytime, dollar is still your best friend.
Do we get to 170 on dollar yen?
Let's talk about 160 first.
Do we get to 160?
Possibly if the Fed does nothing for the rest of the year.
All right, Stephen Chu there, and who's watched He-Man and Skeletor? Who knows Skeletor? Anyway.
I don't.
It's very old school, isn't it? Yeah.
You've got all the references today.
There we go. All right. You should tell me where I can buy those glasses so I can avoid it.
Okay, for sure.
I'm kidding. Yeah. I'm kidding. There we go.
All right. Thank you, Dave.
Yeah.
Thanks, Stephen, mostly.
Yeah.
All right. You can turn to your Bloomberg terminal for more on the BOJ decision. Go to TLive Go to get commentary and analysis from Bloomberg's expert editors. But coming up on the China show, we'll have the latest from the U.S. Secretary of State's visit to China as he meets with Chinese Foreign Minister Wang. This is Bloomberg. China is warning the U.S. that problems are mounting between the two nations just as diplomatic ties are beginning to stabilize. China's top diplomat Wang Yi has just delivered that message in a meeting in Beijing with U.S. Secretary of State Antony Blinken.
The China-US relationship is beginning to stabilize. Across the areas, our two sides have increased dialogue, cooperation, and the positive side of the relationship. This is welcomed by our two peoples and the international community. But at the same time, the negative factors in the relationship is still increasing and building. And the relationship is facing all kinds of disruptions.
There's no substitute, in our judgment, for face-to-face diplomacy in order to try to move forward, but also to make sure that we're as clear as possible about the areas where we have differences, at the very least, to avoid misunderstandings, to avoid miscalculations. That really is a shared responsibility that we have, not only for our own people, but for people around the world, given the impact that the relationship between our countries has around the world.
And our senior reporter, Ian Marlowe, is, in fact, traveling with Blinken and his team in Beijing. In fact, joining us right now is Ian Marlowe to talk us through what took place. Ian, we've seen the pictures. We just played out the soundbite there for our viewers. We've seen the headlines. Take us, a level below. What was the mood like, and what's the takeaway so far among the staff of Antony Blinken? How did this one go?
Yeah, so this meeting is still ongoing. It's going to probably be at least a couple of hours. The meetings today are a lot more, everyone knew they were going to be a lot more tense than the ones they had yesterday in Shanghai.
And Ian, one of the big questions is whether Blinken's going to be meeting Chinese President Xi Jinping. Is there room in the agenda? I mean, is this going to happen? We want to know.
Okay, I think we have some issues. Yeah, at first I thought he was just being fairly succinct, and then I realized Xinghao Yuwenti, there's a problem with the line. Right, they will try and get him back. Of course, Ian Marlowe. In case you missed that, so he just mentioned that this meeting should be taking place over the next few hours or so. Yeah. And to your point, the question is whether or not he then moves on to meet the Chinese president, which I think our guest this time in the last hour said if he does meet the Chinese president, might have signaled some concessions did take place.
Yeah, and there's certainly, of course, a lot for them really to be discussing. I mean, we know overcapacity issues are a key one. There's China's support for Russia's war in Ukraine, but then there's also reasons or needs that the US has where it needs support from Beijing to help curb North Korea's nuclear weapons program and to ease tensions as well in the Middle East. So certainly a lot on the agenda for them to be discussing. But Dave, yes, as we said, that big question today is whether the results from what we get with the Blinken-Wang Yi meeting, whether that's enough to open the door for a meeting with President Xi Jinping.
Yep, we'll find out. Once we do, we'll let you guys know. Very quickly, as we try and get Ian back, of course, just a brief look at markets, then we'll, I guess, circle back in the next segment or so. But, you know, there's been some good news to tell you about. 3.1% now is this rally on the Hang Seng Tech Index. And as you can see on your screens, every single stock on this specific index is up. So it's been a good Friday so far. It's been a fantastic week if you've been long these equity markets. Plenty more ahead. This is Bloomberg. Right, welcome back. You're watching the China Show. Let's bring in Ian Marlowe, our senior reporter, who is traveling with Antony Blinken. He's in Beijing for us. Ian, this meeting, I believe, is still taking place between the Chinese foreign minister and the U.S. Secretary of State. You were there, you are there, your team is there. What was the mood like?
Yeah, the mood today was definitely a lot more tense than the first day of Blinken's China trip here, where he was doing some more public-facing events, going to a basketball game and letting himself be seen in Shanghai. Today in Beijing, these official meetings are all about being very clear with the Chinese side about the U.S. position on a range of issues, from Chinese support for Russia's war in Ukraine to North Korea sending weapons to Russia, to human rights concerns, Taiwan, and the rest of it. So this is the day where they have, a bit more of a tense feeling for these meetings, and you really got that in the room with Wang Yi kicking it off, warning Blinken that even though the relationship between the U.S. and China has stabilized after President Xi and Biden, met in California late last year, that negative factors in the relationship are growing, and it's sort of a big question as to whether the U.S. and China keep moving forward on this stabilization path or sort of veer off it, into misunderstanding, miscalculation, and potentially even conflict. So there was a real sense of oscillating between, stability and volatility here, in Beijing today.
So, Ian, based on that, do you think there's going to be enough guangxi or goodwill between the two sides to merit a meeting later today or later this week between Blinken and Xi Jinping?
I think we can pretty much count on that. He met him the last time he was here. The two men met sort of at the last minute, right before Blinken addressed the press and flew out. Last time it was a bit more of a cramped trip. It was the sort of ice-breaking trip that allowed all the other cabinet secretaries to come through Beijing, and then the Biden-Xi meeting itself. I think we can probably count on that. It hasn't been officially confirmed, but that's kind of how these things work.
Ian, what else is on the agenda today, apart from what we don't know, hopefully, that we will see?
Yeah, so one of the big things, Blinken stressed this in his opening comments this morning, that the meetings today are really to follow up on some of the agreements that Biden and Xi agreed to in California, which was sort of military-to-military communication channels, cooperation on counter-narcotics, which is basically fentanyl and the U.S. opioid epidemic, and artificial intelligence. Now, Blinken's delegation is actually quite big and senior compared to some of the previous trips that I've been on. There's assistant secretaries for Asia. There's a counter-narcotics senior official. There's even a cyber policy and digital policy official who's taking part in these meetings, which kind of shows the sort of tech regulation and all the controversies we have, over TikTok and other things between the U.S. and China. So there's a sort of range of issues that they're going to try and get through today. We have this really elongated meeting this morning, which began around 9 a.m. There'll probably be some other engagement today between, Blinken and Wang, likely kind of focused probably on fentanyl. And then there's other engagements later today. So there's just a host of sort of conversations that are going to keep taking place today, for literally hours and hours of talking, working lunches, those kind of things. And then we'll see whether it's all capped off with a Blinken-Xi meeting before the U.S. Secretary of State flies out later today.
Yep, with yourself, of course. Ian Marlowe, we'll leave you to it. It's a busy day, as you point out there, in Beijing for us. He is traveling with the U.S. Secretary of State. Now, stay in China here. Earnings is still a big theme here, so a couple of big names coming out as well. This is just really a partial list of what's a very long list of results coming out. In the first two on your screens, consumer staples, booze makers are set to report today. In fact, for a preview of what to expect, Ada Lee, our Bloomberg Intelligence senior analyst, is with us right now. It feels as if this company just reported recently, but that's for the other set of results. So anything new that we can talk about and that's caught your eye so far?
Absolutely. So in terms of Moutai, we're still expecting some solid top line and bottom line. So we're expecting high teens % growth in both sales and earnings per share. And that is supported by the 20% increase in selling price for Moutai in fourth quarter last year. But I think what is important to look at Moutai's numbers is how resilient the momentum is going to be, because what we are seeing now is the wholesale selling prices of Moutai. So people that are actually buying Moutai at the, at the consumer level, that prices is under pressure at the moment. So it is currently at about 2,800 yuan per bottle for a bottle of Feitan Moutai, which is a 7% drop from the high in September last year, which is over 3,200 yuan.
What's driving that drop? And then second to that, how important is it going to be for Moutai then to continue to launch other segments or products, like it had sparkling wine, an alcoholic hot chocolate, for instance, in the first quarter? How important is that going to be to try and broaden out the consumer base?
Correct. So in terms of that drop, it is actually quite a concern. I think firstly for Moutai is, in terms of launching new product, what is the pricing level, like you correctly point out? And secondly is also whether the consumer demand and appetite for the alcohol is still there. I think that is one of the key concerns to watch out for. Secondly, just on a broader scale, is that we often use Moutai as a barometer for the economic recovery of China and the actual underlying consumption and willingness to spend by the Chinese consumer. And if this is under pressure, that also means that other premium baijiu prices could also be under pressure. So thirdly, just to answer your question in terms of launching other products, I think those ones is actually to broaden the consumer target group for Moutai, to incentivize younger consumers to drink, not children at all.
There we go.
And just to get them used to the Moutai brand, because one of the key risks for someone like Moutai is that people associated with an older consumer group, maybe just for businessmen. But what they're trying to do is make sure the younger consumer is you also consuming the alcohol.
There we go. Not that young, though.
Not that young, not children.
Okay.
That's where my mind went.
Just a shift in the
in
the target market. Ada, thank you so much. Ada Lee there on all things consumer staples. Okay, we're just getting word right now that this effectively 2% coupon bond in China has been halted in trade after a big pop in the 10%. So might have to do with the fact that there's a great story, by the way, and here's a plug. There's a story in the Bloomberg today that talks about how this bond fever might be cooling on the back of supply risks, and the drop in, might be susceptible to a rebound in yields, according to BOFA. The PBOC has been pushing back, of course, among the risks to watch on the CGB bull run as well. There we go.
Yeah, and a couple of different movers that we're tracking this morning. One of those is Goilian Securities.
Yeah, that's a brokerage.
Although that actually could be suspended from trade right now.
So this is tricky because the 8 shares, which is on your screen, is trading. The A shares, you're right, is suspended from trade. I believe on the back of this announcement that it's planning to raise funds for this other deal, but it's playing out across the one specific one that you could express that with in Hong Kong, up 14% here. Along with other brokerage stocks, of course, after the company announced plans to acquire control of Midterm Securities. Okay, we're headed into the Tokyo lunch break. Plenty more ahead. This is Bloomberg. Welcome back. You're watching the China Show, where most things China, but in cases like today, of course, we're slightly paying more attention to what's been taking place or what could possibly take place in Japan, where the BOJ is set to announce its latest policy settings, and it could, in fact, come out any time now. But the average, I believe, since the new governor took over is around 12:30 local time, which would mean that's about an hour from now. 0.4% heading into the lunch break. Dollar-yen 155.61, and your 10-year yield is getting closer to 1% handle, highest level here in a couple of months. The 2-year yield is back to the highest in 15 years.
Yeah, and actually that's as we see Treasury yields hitting their highest levels as
That's
well
true.
for the year. The eco data, of course, out overnight. We had that core inflation reading and really showing that inflation is very much persistent in the US. And at the same time, you've got eco figures around GDP that are showing a slowing in the economy as well. So it's that concern of stagflation that's coming back into focus once again. But what we're seeing today in the session so far is gains are actually on track for the best week for Asia stocks this year. It has been good numbers really coming out from big tech overnight. So the likes of Microsoft, Alphabet, for instance, really allaying any investor concerns around, for instance, spend on AI, whether that's really starting to contribute to ROI, and also really contrasting what came through from Meta early this week, because that stock was really slammed in after hours yesterday. Today, though, we're actually seeing IT. You can see that top left there, gaining the most among the region. What else we're tracking, again, is that story of earnings coming through. You've got energy moves, of course, and then also bond yields just rising here. But the dollar gauge right now, fairly flat, really that focus on the Japanese yen, of course, ahead of the BOJ. But what else we're tracking, of course, is China's largest auto show. It's back in Beijing, first time since pre-COVID days, and some of the biggest names in the industry are showcasing their extravagant new models.
Yeah. Stephen Engle, of course, he was, in case you didn't get what Bell was alluding to, BY. In fact, every time I can talk about this later. Let's get to this first. Stephen Engle, of course, he spoke with the head designer of BYD, Wolfgang Egger, about the inspiration behind those hot cars, which we'll talk about in a moment. Let's play the tape.
Technology and design, they need to be also one firm unit. And for this, we are also very, as designers and as BYD generally, also our customers very happy because the latest technology and the platforms, they are thought from the very beginning to offer the opportunity also to realize these proportions, because this depends also on the technology. Because sometimes you want to do it and you cannot because the base is not adapted. But in our case, we are so lucky that we have wonderful platforms.
This is Wolfgang Egger's latest offering from the joint venture that BYD has with Mercedes. Denza is the company, and the car is the Z9 GT. You can really see some of those European influences coming out in the lines of this car, kind of a shooting brake style luxury EV. Really emphasizes technology as well as speed. This car will go 0 to 100 kilometers per hour in just 2 seconds, and it could be quick to the European market, perhaps as early as the fourth quarter of this year.
The company chairman, also my boss, Mr. Lian, they give a complete free space for design because they know about the importance of design. And I never enjoyed so much freedom as I'm doing here now in this period. The new thing is really to search again and bring back the emotion to these cars with the beauty. And we have these lines, very elegant, still not art, but we are really looking to get close to this challenge to have a timeless piece and a beautiful piece that people can love in all over the world.
You can definitely see Egger's Lamborghini experience shaped in this Yangwang U9 super sports car, also from a BYD affiliate, Yangwang. Now, speed obviously is a big theme here, including speed to market. One thing Egger told us is that unlike the legacy automakers in Europe, BYD and the Chinese automakers can take from design phase to market pretty quick in as little as about 2 years.
The speed is higher. No, we are running much more and working hard. Also, our team is working day and night very hard. They are all in competition, creative competition, but they are all one team and have a common heart. Now we reached the 24 months target for developing the car, from the creative moment to the production. And so, yes, this is amazing. It's amazing.
And what would a Beijing Auto Show be without a concept car? This is the supercar from, of course, designer Wolfgang Egger, perhaps his vanity project. It is a concept, yes, but could come to market. It is the Fengchengbao Super 9. And I can kind of see where the inspiration came from. If the Batmobile or the Mach 5 from Speed Racer were an EV, this would be it. Limited windshields, no roof, fast as lightning. Stephen Engle, Bloomberg News at the Beijing Auto Show.
Yeah, and Stephen Engle is in fact at the venue for us right now. Steve, I mean that last model that you just put out there, the two-seater, I would say maybe more appropriate if you're having a date, but you're not sure about the date because there is that hard division between you guys. Fantastic work, by the way. Pretty cool models, of course, out of BYD.
Yeah, I mean, I was a kid again, obviously, here. I wanted a Mach 5 all my life. That's from Speed Racer, and this was really taken right out of the pages of that Japanese comic book. But it's a beautiful car, and really, one of the things that's been eye-opening for me these last couple of years, I haven't been back for the auto show for quite a few years. The last Beijing Auto Show was pre-pandemic in 2020, and, you know, it really is the dominance of the Chinese players in this market, like BYD. They're the overwhelming leader, 33% of the market. And that joint venture we talked about, Denza, that's quite a sleek car as well. That was a joint venture between Mercedes and obviously BYD. They used to be 50-50, but you know, just a little while ago, Mercedes actually kind of dumped out of it a little bit, down to just 10%. I wonder if they're regretting that now, because Denza has really picked up a lot of momentum, sales momentum, with these new designs, like we just focused there, that green car, because of Wolfgang Egger really bringing more of a European design style to these models. And 6 out of the top 10 models of EVs that were sold in China in the first quarter were from BYD. Sure, the more affordable versions, but still, BYD really making waves and making a lot of these legacy car makers question how to do and how to regain their momentum in this market. And in fact, the Mercedes CEO gave a roundtable yesterday, and he essentially said they're not going to do joint ventures, further joint ventures. They also have a joint venture with Geely. They're not going to do that. Instead, they want to partner with Chinese technology companies, because a big theme here, Dave, has been the blurring of lines between pure technology companies and automobile makers because of the EV space. There is no, you know, delineation anymore. Technology companies can be EV makers, and they are, like the one behind me right here, the Xiaomi SU7, really making waves. And Lei Jun, the chairman, is right here, or was just right here just a second ago.
Yeah, it's really incredible, Steve, when you've got Apple that tried to develop its own car for more than a decade, right, and then you've got Xiaomi and Huawei that managed to put them out in really short amount of time. But I'm curious what you're hearing on the ground there about concerns around possible overcapacity. There's only so many consumers in China that can buy these. There are concerns, of course, from the Europe in particular, we already know. And when you have Chinese EVs that often do have quite a resemblance to some European makes, what's the sort of sense, or are there any concerns or conversations that are happening about that?
Yeah, you know, that design element to look like European cars is not a fluke. I mean, that is by design, so to speak. I mean, in years past, perhaps people would saying they're ripping it off or they're copying, but they're hiring these European designers like Wolfgang Egger and others, and they're also bringing to market some of the designs that the global audience wants, and the Chinese consumer wants tech-laden, gadget-laden vehicles. And let's face it, a lot of the legacy makers have been slow on their in-cockpit kind of telematics, or not the telematics, but the gadgets and the like. You know, the Chinese consumer wants to go from their house to the car and elsewhere and still always be connected via their smartphone. So that is really a major trend right now. So again, as far as the protectionism and the like, and as far as the overcapacity issue, the Mercedes CEO did talk about that yesterday. He says there's going to be a reckoning among the EV players here in China. There's going to be further consolidation. He said, quote, many Chinese startups are currently burning through cash. So all this hype that's happening these few weeks here at the Beijing Auto Show, yes, they're trying to grab eyeballs, they're trying to grab traction, but will they all be around by 2030? Mercedes CEO says no, there'll be consolidation.
Steve, great stuff. Stephen Engle there in Beijing for us. Checking shares at BYD right now, up 4% here in Hong Kong, among the many other stocks that are driving this market higher. In fact, just on that note here, coming off highs of the day, although on price itself, we're doing very, very well across these markets. Hang Seng Index, 1.5%. HS Tech, as you can see, there we go, 2.5%. We were up as much as 3% at one point, but still on track for the best 5-day period going back to November of 2022. This is the China Show. All right, all roads lead to that building on your screens, and at some room inside that building, there's a group of people deciding on monetary policy in Japan, and at some point they're moving to another room to talk to the press in a couple of hours. Any moment now, the Bank of Japan is set to release their latest policy settings. For more on this and markets that have done exceptionally well, of course, in Japan, Kei Okamura joins us right now, Senior Vice President and Portfolio Manager at Neuberger. Berman. Kei, as always, a pleasure to speak with you. We in the
Likewise.
media, and years back you were also part of the media, tend to over-obsess over certain things, like the BOJ, for example. And I'm wondering whether or not you could put this meeting into context for us. Is this a big meeting, or is this meh?
I think it is a big meeting in the sense that, we expect that the policy rate will likely remain unchanged. But as you said, it's what's going to happen in the other rooms in that building that you showed earlier in terms of, what's going to be the outlook on prices going forward, and also the comments that are going to be made by Governor Ueda in the upcoming press conference. And specifically, I think the view in the market is that the Bank of Japan is considering rate hikes going forward, and how data dependent they're going to be, especially when it comes to consumer prices and the sustainability of prices going forward. Having seen, of course, the Tokyo CPI numbers earlier today.
Yeah, I'm interested for your take on that. Do you think that we're starting to see a sort of a self-sustaining cycle of demand coming through? Or do you think that it's just too weak yet to really necessitate any sort of move higher from the BOJ?
Yeah, no, that's a great question. And the short answer is that we're starting to see the beginning innings of it. Obviously, the rising demand is a function of the falling inflation as a result of the falling import prices. And then what will follow through from that is higher wages. Now, we've all been hearing about the positive spring wage negotiations, but obviously, I think what we need to be looking at is how that will filter through to the rest of the economy in the months to come, namely May, June, July. And from there, I think we will start to see a pickup in consumption, and then from there that would feed through into hopefully a positive sort of cycle of rising consumer prices going forward, and that I think is where it's going to become a game-changing moment for Japan.
Yeah, the stars have really come together for this market in Japan. Corporate governance, for example, which we'll get to in a moment. Kei, I know you've written a lot about that as well, but simply just in terms of having an interest rate, having a positive interest rate in Japan is something I guess many fund managers were not accustomed to. Now that that's here, how is that affecting what you do? How does that affect managing equity markets in Tokyo?
Of course. Look, with this sort of prospect of rising interest rates, we've obviously adjusted our portfolio and our strategy as well. So, we are now overweight financials, and say 3 years ago, when the outlook for that was a little bit more uncertain, we had a much more neutral and underweight position before that. The reason why we're more overweight, of course, is the fact that, with the rising interest rate means that you're going to have positive net interest margins, and that should bode well for, say, earnings of lenders. But in our case, as long-term fundamental stock pickers, and, we want to be invested in these companies over the mid to long term, we have to make sure that it's going to be sustainable growth, and therefore we're not investing indiscriminately across lenders. We're picking out the ones like, say, Yamanashi Chuo Bank, which is in the foothills of Mount Fuji next to Japan. They've got a great local exposure. They're right next to Tokyo area. They're going to be going into the Western Tokyo area to increase mortgage loans business. And then in addition to that, they're going to be seeing, higher net interest margins. And then added to that is improvements in capital efficiency as they bring down their Tier 1 capital ratio that's, currently in excess at the moment. They'll take the surplus capital, reinvest in the business, but also increase shareholder returns going forward. Those are the types of companies that I think that are becoming increasingly more interesting in this type of environment.
But of course, the BOJ is likely to stay on hold for a period to come here. So in that sort of environment, when you have a weaker yen off the back, you've got that really feeding into consumption. Consumption stocks have been under pressure. How are you playing that sort of trade, especially when we had seen those strong wage negotiation results?
Right. This is a very important point because I think, in the last sort of 12 months, we have been seeing quite a strong rally in Japanese equities, as David had pointed out earlier. I think the point, though, is that going forward, as Japan enters into this new paradigm of, real interest rates, rising prices, and of course, at the same time, increasing labor costs, there's going to be winners and losers emerging in this market. And that's why we've always been advocating for long-term investors to take an active investing approach in this market as opposed to passive. And so the types of companies that we're looking increasingly at are those that can take market share, continue to pass on rising input costs, and can clean up its balance sheet. And really, those are the types of companies that are run by progressive management. So herein really lies the important point, which is that you need to actively pick your stocks, you need to do your due diligence, you need to sit down, meet with the companies, and in some cases you need to engage to get them to re-rate. It's a bit of a hard-working process, but going forward, if you do that, you'll be seeing some good returns going forward in this market.
Right, and Kate, that takes us into, one of your passions, if I could call it that, certainly, calling for an improvement in corporate governance in Japan. And I'm wondering, is that a conversation? You mentioned you're directly, of course, involved in talking to some of these corporates, for example. Is that a conversation that's taking place only among the bigger corporates? They're more receptive to that idea? Or are you starting to see that permeate lower and lower down the market cap scale?
It's permeating lower and lower, and especially in the small to mid-sized market. David, I'm sure you've been looking at how the market has moved in the last 12 months. We've seen a bifurcation in the market where large caps have outperformed at the expense of the small to mid-sized market. Now, this is partly a result of, the market dynamics. The strong run-up in the large cap space has meant that, a lot of foreign inflows have come in using cheap passive vehicles linked to the large cap names. And then, of course, the weak yen has been a strong support for large cap exporters. But another reason why is because a lot of these small to mid-sized companies are under-researched, and of course at the same time their disclosure hasn't been up to the same standards as these large caps. So a lot of these managements of the small to mid-sized companies have been scratching their heads trying to figure out what they should do, and this is where we come in and we engage the companies to act on capital management, address on the corporate governance, sustainability front, and we've been getting some really good results. But that said, we do need to continue to apply pressure from the outside, which is why earlier today we put out with the Asian Corporate Governance Association an open letter for companies to unwind and increase the pace of unwinding of strategic shareholdings, which we think will be crucial to see some of these companies re-rate going forward in terms of improving capital efficiency.
And Kay, to that point, this call to eliminate these cross holdings, how much value do you think that would unlock in particular?
I mean, it's substantial. If we look across, the Topix 500, there's almost 10% of these of the entire market held amongst these cross shareholdings. I mean, think about this. It's basically capital that should be deployed into growth investments that are now being trapped in the equities of companies, and it's not being put into use. So what we've advocated is that companies that should basically have this as zero, but if they're going to maintain it, then they need to have a timely target to reduce it to zero, and then in the interim, they need to disclose what they're going to be doing with all of these business transactions that they have through these strategic investments. Sometimes it has really resulted in anti-competitive behavior, such as what the financial services watchdog announced last year with the insurance companies. And we think that, as this sort of cleanup process takes place, this would obviously bode very well for corporate governance and capital management going forward. And at the same time, I think it's important to remember, it's not just the holders of this of these capital of these cross shareholdings that's an issue. It's also the ones that are being held as well. And so it would help those companies, and those tend to be the small to mid-sized companies. They will obviously find this as a great opportunity to take those proceeds, invest in business, and seek for better reforms going forward.
Mate, fantastic. As always, a pleasure to have you on shows and give your insights. Kei Okamura, Senior Vice President and Portfolio Manager at Neuberger Berman. Just in case you missed that interview, of course, and just in case you're curious as well on this BOJ meeting that's about to hopefully drop maybe in the next 6 minutes. We'll see. Turn your attention to the Bloomberg TLIV Go to get commentary analysis from our expert editors. So in case you're wondering, that's inside banter here, inside baseball.
David's bet for when the BOJ comes out, to be clear.
In the next 6 minutes. Not that that's important. There we go. Welcome back. You're watching The China Show. Equity markets across the region, 0.6%, on track for the best week so far this year. Of course, it's relatively early days, and who knows what we'll get from the BOJ, which could come out any time now, Bill.
Yeah, that's the big watch.
Yeah.
Actually, if you take a look at since Ueda became governor, it tends to come out at an average of 12:31 p.m. So we're still about 35 minutes away from that happening. But certainly the big focus for investors over the next hour or so. Even though we're not expecting any sort of move, it's the question on what we get in terms of guidance, whether we get any announcements around QT, signaling as well on further rate hikes to come.
Yeah, and maybe how they also, to your point earlier, how they frame this horrible Tokyo CPI print, which came out horrible in the sense that maybe it doesn't really go with their narrative of inflation really coming back, that massive miss, of course, across all metrics. There we go. Dollar yen, bottom of your screens. And we are on the lunch break over in the cash markets in Tokyo. That's it from us here. Plenty more ahead, though, with Bloomberg Markets Asia. Stay with us for coverage. This is Bloomberg, and happy Friday.